What's going on, everyone? It's Justin Spittler here, aka JSpit Trades. I want to welcome you back to the channel. If you are a returning viewer, if you're new to the channel, I also want to welcome you. At this channel, it's all about charts. Primarily, we do stocks, but also occasionally we'll dip into crypto from time to time. But typically we're looking at the indexes, trying to get a sense of what the market's doing. And sometimes I'll go into more specific themes. I'll look at individual industries or sectors. And then sometimes I'll even look at some individual stocks. And that's what this video is all about. So in this video, I want to cover some stocks that I think have the potential to emerge as new leaders, because rotation is the lifeblood of a bull market. And often when we talk about rotation, we're talking about it in the sense that, money is moving from one area of the market, such as a sector or industry, to another sector or industry. But there's also rotation from stocks that are emerging as different leaders and have, their time in the spotlight, and they are the stocks to own for a period of time. And since we're, the majority of the way through this earnings season, a lot of stocks have emerged as potential new leaders, in my opinion. And what these stocks have in common is they're all had really, really positive reactions to earnings. So they had what many traders call power earnings gaps. So they basically broke out on huge volume, and then there was some continuation from that move higher. And that's what we have today. So we have about 7 stocks that we're going to look at, and all of them have that in common. They reported earnings, and the earnings by the market's interpretation were good, and that's why the stock shot up. So the first name we're going to look at is FormFactor. So this is a semiconductor company, and this is a $4 billion semi name. What's interesting about this name is it's actually profitable, which is not something you'll find in a lot of smaller growth stocks, but that's one thing this stock has going for it. And what's interesting here is you can see that it broke out on heavy volume last week, and it rallied up 21% on the week. And this past week we had continuation. So just those two things right there are very encouraging. But you can see we also broke out of this base that goes back to the prior cycle highs. You can see that it's now back above where it topped out in late 2021. But you really got to zoom out on this one to appreciate what kind of chart we're looking at here. So when you zoom out, you can actually see that this chart has broken out to highs that date all the way back to 2006. So this is a massive base, almost a 2-decade long base. And so this is a major change of character type move, and it really, really has my attention. And I'm really excited about this stock. And I know a lot of people on FinTwit, a lot of traders and investors on FinTwit are not excited about this, because this stock is almost exclusively owned by institutions. I actually looked it up on FinViz before coming on here, and the institutional ownership on the stock is actually 99.8%. So this is the furthest thing from a FinTwit darling, which in my opinion is actually a huge positive, because it's often these popular stocks, such as your Palantir, your Firm, and your Robinhood, that you just have so many eyeballs on them. And despite delivering the goods during earnings seasons, they had negative reactions. So I think those very popular stocks, sometimes a lot of the good news, the excitement gets priced into them. And even if they deliver stellar quarterly results, which is what we saw in names like Palantir, Hood, and Affirm this earnings season, they can fall, or at least not have follow through and the type of positive reactions that you would expect. So long story short, I really like to gravitate towards these gems, these names that are less talked about and less followed on FinTwit, because if you can position yourself in these names, you're often siding with institutional money rather than the dumb money or retail money. So it's a big reason to like names like FormFactor. ZETA Global is another name that I think has the potential to emerge as a leader moving forward. You can see how beautiful and clean this chart is here. So this name went public back in late 2021, or the summer of 2021. Actually had an initial decent run up, despite a lot of growth stocks in the market falling apart. But then when the market really started to unravel, this got hit as well. But it bottomed back in June of 2022, so well ahead of the indexes. And then from there, it had a big run up, pulled back, built out this big rounded base. And you could see the huge accumulation bars, these big green bars down here, that's institutions leaving their footprints, but they were basically accumulating ZETA during that time. And then it just started to climb out of the space. And then it was an earnings reaction that catapulted out of ZETA out of that space. And you can see the massive volume that accompanied that. Looks like the highest volume ever for the stock. So really, really constructive action here. This name is a AI-powered marketing cloud company. So software company. I like that it's new merchandise. During bull markets, traders and investors often gravitate to new merchandise because they have new exciting stories. And so ZETA has that going for it. And as far as the business, they help companies with their marketing, and some of their customers include BMW, CNN, Hanes, Jaguar, and Motel 6. So some name brand companies, some well-known brands they work with. And on the daily, you can see that after that initial pop, it had a few days of continuation, and those continuation days were followed up with or accompanied by heavy volume. So to me, that's really, really encouraging. And I don't have the daily RSI on this chart, but the daily RSI for ZETA right now is actually 84. So it's very overbought. And you might think, oh, that's good for the people who are in this stock, because they had this massive run up and the stock went on this big move, and that would be true. But I also think this is a positive, even if you're sidelined and not involved with this name yet, because if you're looking to buy stocks after they have these big power earnings gaps higher, the names you want to gravitate towards are the ones that have that initial move, the follow through, and just keep grinding higher, because you don't need to get in there right away, but you want to see this stock continue to show strength. And then once the stock cools down, and maybe it'll have pullback, or maybe it's moving averages, such as a 10-day moving average, will catch up to it and start to act as support again. Then you'll know that you're getting involved with some of the top names. So I really like stocks that, when they have these power earnings gaps ups, they get really, really overbought, and there's a lot of continuation on the initial move. And ZETA, checks that box in spades. Proceps Biorobotics Corporation is another name I really like. This is another name that's newer merchandise, but this name is actually a $3 billion med device companies. And I really like how this broke out on heavy volume. Similar to ZETA, you had this heavy accumulation, which you could see by the big green volume bars. We look over at the daily on this one. We can see that this name is actually potentially setting up already. You can see this rising 10-day moving average has almost caught up to this consolidation pattern up here. So it's no longer, in my opinion, it's no longer extended. It's setting up for a potential buy opportunity. You're going to want to see how it reacts to this. You also want to be mindful of how the market trades next week. We have a lot of inflation data coming out that could throw a wrinkle or a wrench in our trading plans, particularly if you're a swing trader like me. But nonetheless, just thinking about the stock on an individual basis, I think you really want to pay attention to how this holds up and if it continues to consolidate, or if this rising 10-day moving average comes up and acts as support and a potential launch pad. So definitely a name to watch. I also like what I'm seeing from TMDX. This is a name that's got a little bit longer trading history than some of the names we've looked at already. You can see that it went public back in 2019. And the thing I like about it is while it isn't necessarily as new of merchandise, it has proven itself to be a winner. It's kind of a wild stock. You can see these. It really takes investors for a roller coaster ride, but it's moving up and to the right, which I like. And you can see that it recently broke out of the space on heavy volume after reporting some really explosive sales and earnings growth, and had this big initial pop. So last week, this rallied up 39% higher, and this was followed by continuation this past week where it grinded another 1.6% higher. So nice to see that follow through on TMDX. And even this trend line that I drew that really dates back to right around when it went public in 2019, you can see that we actually have broken above that and actually flipped it. Actually, you can see it came down here and tested it and bounced off that level. So a lot going for TMDX. And I also should mention before moving on that this name still has a 17% short interest. So if this name can set up and consolidate, you do have a potential for a short squeeze with this one. TOST is another name I want to look at. Just a really, really clean, beautiful base. And this one broke out on earnings this past week. So you can see that we closed at the highest level since February of 2022. That's bullish. The breakout on volume is really encouraging. And yeah, just really like what I'm seeing from TOST. This one hasn't entered a proper uptrend yet. We'll have to see if this breakout holds. But if this one can get running, it does have a ton of upside because unlike some names, it hasn't even entered a stage 2 uptrend yet. It's still in this basing formation. So TOST is definitely a name to keep a very close eye on. Which one is this? This is Imping. So this is an IoT company, $4.4 billion communication equipment company is how it's categorized, and they make tag chips for Internet of Things applications. A few things that I think about this name that are pretty interesting is, so the Internet of Things theme isn't isn't talked about at the same level that AI is right now, but I think it's coming. I think it'll only be a matter of time before it captures the imagination of traders and investors. And when that time comes, to my knowledge, there's not a heck of a lot of pure play Internet of Things stocks out there. So if that narrative does catch hold and does catch the excitement of investors, this could be a name that becomes very popular. But keeping it more on the technicals, what I do like about this name, and it does have a longer price history than some of the names we've looked at so far, is that we broke out on volume. Then we had that continuation, not this past week, but the week before. And that was also accompanied with a higher volume. And now we're really in the third week of this breakout. And you can see that this rising 10-week moving average is coming up and could potentially act as support up here. So you're going to see how this is handled, and if it if this acts as support, or if it needs to fall a little bit further and wait for that rising 21-day EMA to catch up. But this is a name to definitely keep an eye on. And next we got Kyndryl Holdings. This was actually a spinoff of IBM. And you can see that it didn't go well initially. You can see that it actually got completely decimated. It fell 80% from its highs, and it fell quite quickly. But it bottomed in October of 2022, and since then it's been grinding higher. And this past week it broke out on good volume, not monster volume, but it's pretty strong volume. And it closed the week near the highs, and actually closed up 33% on the week. So definitely a name to keep an eye on. The daily RSI on this one is hitting 81. So that confirms the strong move. That's what we want to see. Now, at this point, I don't typically like to buy stocks that are that overbought, but I like to stock stocks that reach that level of getting overbought, because it indicates a lot of strength on the move higher. And then you just exercise patience, and you wait for those moving averages to catch up. And you just wait for the stock to set up again, maybe build out a little base, maybe flag, and just set up for its next leg higher. But a few things I really like about this chart here is you could see, just how fast we fell. There's really not a lot of price memory up here. So if this can get going and gain traction, there's really not a lot of resistance between where we're trading at right now and the former all-time highs. In fact, the levels that I marked out on this chart, which I think could potentially act as some temporary resistance. There's not super strong resistance during this decline at all, really. But this $35 level is an area to watch, and around the $41 level would be an area to watch before you could break out and retest those prior all-time highs. But definitely a name to keep a very close eye on. It's only a $6.3 billion market cap company, so a lot of potential upside if it can get going. And then the last name I want to cover is SEMrush. So SEMrush is a marketing software company, $2.2 billion market cap. And this company has already profitable and exhibits explosive earnings growth. So there's something to like from the fundamental side. And yeah, I just really like how this is shaping up here. You could see that, we sort of have this inverse head and shoulders pattern. You could see a shoulder here, the head, or this, this big base area over here, and then another shoulder. And we broke out of that on volume, and we closed this week at the highest level since early 2022. So this is looking really good in my opinion. This name is, does qualify as newer merchandise. You can see it hasn't had a real proper bull run. Yes, it did storm out of the gate and have a decent run up, but I'm talking about a longer run with a multi-year run. It hasn't experienced anything like that quite yet. So I think this is setting up really nicely here. It does have a little bit more supply to shoot through than some of the names we looked at. So personally, if I had to take my pick from the names we covered today, Form Factor and ZETA are probably at the top of my list. Not saying I would necessarily jump into either of those names right now, but I like how Form Factor broke out of that base that's about 20 years. And I like that it's within semis, it's an AI play, and I like that it's institutional owned. And then ZETA's chart is just really good because we have all this heavy accumulation, and it's new merchandise breaking out to highs, and this chart is quite bullish, and the follow through that we've seen on this name has been really impressive too. So these are some names to watch. I think you're going to want to see how all of these names trade in the coming days, particularly with the inflation data we have coming out this coming week. But these names are very high on my watch list right now for potential swing trade candidates, for potential leaders going forward. And I like that a lot of these names are just not heavily discussed. They're not popular on FinTwit. And, in my opinion, I typically have better success when I trade stocks that not as many people are talking about. So most of these stocks fit that bill and fit that criteria. So, yeah, if you guys enjoyed this video, please give it a like and subscribe to the channel if you would like to see more content like this. But that's it for today. I'll talk to you guys soon.